Hello, fellow risk takers, and welcome to my worst investment ever. Stories of loss to keep you winning. In our community, we know that to win in investing, you must take risk, but to win big, you've got to reduce it. To join our community, go to myworstinvestmentever.com and receive these 5 free benefits. First, you get the risk reduction checklist I've created from the lessons I've learned from all of my guests. Second, you get my weekly email to help you increase your investment return. Third, you get a 25% discount on all A Stotz Academy courses. Fourth, you get access to our Facebook community to get to know guests and fellow listeners. And finally, you get my curated list of the top 10 podcast episodes. Fellow risk takers, this is your worst podcast host, Andrew Stotz from A Stotz Academy, and I'm here with featured guest Manish Tyagi. Manish, are you ready to rock?
Yeah, of course. Looking forward to it. Thank you.
I am super excited to have you on. And I want to introduce you to the audience. Manish used to be a commander in the Indian Navy before he decided to become a stand-up comic sometime in 2014. And he goes by the name of the Knotty Commander. An officer and a gentleman, he has some very funny tales to tell from his life experience. His style is full of unprecedented stories blended with wit and humor. His Facebook page and YouTube channel have over 250,000 followers, with multiple videos having over 3 million views. He has performed across multiple cities in India and overseas. And as a motivational speaker, he has also spoken at Josh Talks, 14 TEDx conclaves, and is also a regular with corporate assignments. Manish, take a minute and fill any further tidbits about your life.
Thank you so very much. It's an honor to be on this podcast and speaking to you. A little more than what you spoke. I'm otherwise an engineer by education and qualification, and I was commissioned with like a typical young guy who wants to serve the nation. I was commissioned way back in 1989 and served on till 2012. That makes it 23 years. Subsequent to quitting the armed forces, I was very inclined to become a corporate trainer. I thought I should share my life experiences with people from what I learned in my life and in the armed forces. And that's what started out to be my career in 2012. I was also a business head India for the channel partners of Cummins, which is a US based firm for the marine segment. Worked with them for 3 years as a consultant in business at India, corporate training, career transition coach, and subsequently 2014 stand-up comedy, the bug hit me. And then eventually, it was just one thing after the other. That's kept me busy till the pandemic started, yes. But we've been doing a lot of online shows, so yeah, it's okay.
When the average person looks at a comedian, they see kind of that moment that they deliver a funny line or a funny joke. They don't realize how much work goes into getting to that point. I mean, how do you tell us just a little bit about how you prepare for a show or how you prepare new material, that type of thing?
So each comedian has his own style. All right. So for me, being a corporate trainer, getting on stage, holding a mic and interacting with people was not at all. There was no stage fear. There was no problem at all. The only thing was creating, the material, because I'm 54 and in India, stand-up comedy, unlike the US, is a very, very recent and a nascent industry, like you could say like 6, 7, 10 years. And to connect with the youth, because it's majorly a youth-driven industry, all right? So to connect with the audience out there who are like half your age, and some of them look up to you and say, oh, my dad like saying this stuff, not happening. So to connect with them, so my style is more observational when I see people around me. And that's when people ask us this question as to where do you get your content from? And I'm like, from you. That's where you get it from. You observe people. And plus I focus a lot on the latest news which is happening, so probably a blend of both, and that's what goes on stage.
Yeah, there's a lot of things that'll make you laugh and cry in the news when you look at it.
Absolutely. Yes. So it's a question of finding humor from whatever is probably making you cry also. Like somebody asked me the other day, he said, what keeps you focused? I said, pain. Yeah, that's a good way to.
Pain.
Yeah, that's a good way to stay focused,
It's very real. I mean, I often think to myself that, every time I've made a major, valuable, change in my life, it's been motivated by pain or fear, and exactly. I know that, fear is not the way we raise our kids, for instance, constantly putting them in fear. We want them to experience the joy of life. But sometimes that little fire burning under my butt is going, ow, I got to go because this isn't working anymore. And next thing you know, you're on to your next thing. So yeah, it's definitely a pain. There is a lot of pain.
Opportunities get created, because you want to get over one phase of your life, or probably, get over something and then move into a different, it could be in any form.
Yeah. And I guess that when you think about the therapeutic benefits of comedy, it's like if you can get people to laugh at their pain.
Yes.
I mean, I just feel choked up right now, literally, as I say that, thinking about, pain, when we feel pain and when someone can help us relieve that pain, that's valuable.
Absolutely. Yeah, that's the thing that keeps me also going, because when somebody writes to me or, in a personal mail and says that, look, I was depressed and I was very down, and then I saw your videos and I binge watched them overnight. And then I realized that, there's so much more to life. I think that's where I think it works for me. That's my motivation. That keeps me going. Definitely.
Yeah. I mean, I do some corporate training and, I try to talk about what I learned from a master, Dr. Deming. And he taught me when I was about 23 years old, and he was, the master of quality and just an amazing guy. But he was so tough on senior management, and he was just trying, basically showing them that they didn't really know what they were doing in many cases. And he would just raise up these points of, the competition's outside your company, but what you're doing is you're incentivizing people inside of your company to fight with each other, over a bonus, over performance appraisal. And you're setting up these teams that are fighting. People don't get along with each other already. And now you're putting fuel to that fire. So when I walk into a room and I bring that out in the open, most people never even think about it. So there's a relief there just talking about that. And when we're trained from the, let's say, US MBAs, like, good, healthy competition. But wait a minute, we're not talking about competition within the company. We're talking about competition against our competitor. And I think one of the things I've learned in Thailand, and I think it's the same in India, is that, the way people treat each other is very different than the US style. It's a little bit more, less confrontational and on all of that. And I just feel kind of sad when I see, whether it's Indian, Asian, Chinese, Thai, I see my friends who are implementing these KPI systems and driving people and thinking that, having screens on your desk at your office is the way that you manage people, but people aren't robots. And so when you bring this out, now I don't bring it out through humor, I bring it out by just saying, here's where it is, here's what's going on. When I bring that out, basically people, they respond.
Okay.
And even you respond by blocking out your screen.
I'm so sorry. Give me a minute. There's a power failure. And oh my God. This doesn't happen normally. You'll have to edit this out. I'm so sorry.
No problem.
Yeah, we're back. So there's a generator system which takes about a minute for the power backup. I live in India, So.
I know. Okay. So anyways, we've got a good background. So let's, are you ready for the question?
Yes, sir.
All right. Now it's time to share your worst investment ever. And since no one ever goes into their worst investment thinking it will be, tell us a bit about the circumstances leading up to, then tell us your story.
Okay, so we go back once again to 2012 when I was quitting the Navy, all right? And that's the time when you quit, you get some money, and which is your retirement benefits. And I was also, for me, at that point in time, I was going through a very messy divorce. All right. So the first thing which I had to do was, like in India, what happens is when you've been serving in the government, you get a government accommodation. So I had to secure myself a place for myself, and then, the litigation and everything else that was going on. At that point in time in India, the real estate market was doing exceptionally well. And, you've seen that, you must have followed that. It was multiplying at a very quick pace. So as you discuss with some people and you trust some people, I park my money in some of the real estate, in terms of accommodation, buying a house or an apartment, or something stupid as an assured return check, which always bounces. But then that's what happens when you are going through your own turmoil in life, and you tend to trust somebody else, and you hope that this person is not going to cheat you or mislead you rather.
Yep.
So when the time came to pay the alimony, the real estate had gone down 25%. So all the money which was there had, so anyway, you had to sell property, the assured return checks had bounced. And so whatever money came out, there was another friend of mine who said, okay, I have this guy who's a great guy who invests in mutual funds, all right? So why don't you put money with him? I'm like, okay, so that's the fastest way to recover whatever I have lost in the process of that downturn in the real estate. So I put money there. And we were doing all right. There was a substantial amount over there till the pandemic hit. And March 2020, you know how Indian Sensex started sinking. I was all right till then, till one day I read in the morning that Franklin Templeton had frozen 6 of their funds, which were the debt funds in India. And they blocked out about 28,000 Indian crore, rupees in India. And I had a substantial amount there. So I spoke to my agent and said, what the hell is happening? He said, no, a month or two and it'll come back. And what we're going to do is we reshuffle your entire portfolio. I said, if you're going to reshuffle my portfolio, which is taking money out of a particular mutual fund and putting it in another one, means there's a redemption happening. So I said, what is the long-term plan for me? And he's like, we'll put it in something else. And there was another chunk, which was in another debt fund. So the fear was that if that also goes into, like Franklin Templeton happened, there's a lot of money which is getting blocked in the market. You don't know what's happening. So I said, if we are redeeming the mutual funds, I want the money in my bank. So I lost money in that redemption. Franklin Templeton was anyway locked. I lost about 10-15%. I said, okay, now I can see my money in my bank, and I put it in a very basic 3%, 3.5% fixed deposit. And I said, I want to see my money not grow. I just want to see my money. All right. That came from a lot of insecurity from the past and whatever happened. There was some money lying, cash, and there were friends who said, buy gold. Next year is going to go up 20%. I'm like, okay, let's buy gold. There wasn't much money, but whatever, because international travel had stopped. So there was dollars lying in all. I said, okay, let's just buy gold. Bought gold. And then somebody said, okay, diversify your portfolio. So gold bonds. That's okay. Some money in gold bonds. Now, you know how the Indian market is performing now. It is at peak. It's like close to 53,000. And we withdrew the money at whatever. I don't know. I don't even want to think about it. Had I left the money there, it would have doubled. Unfortunately, gold came down 30% from the time I bought. The month I bought gold bonds, the next month they were selling 15% cheaper. And I'm like, look, I think I'm jinxed with money, okay? So there was a point where I put these jokes on my line and I shared them also. I said, I thought about Bitcoin and next day it was 25% down. And I thought about like Adani in India, they lost $16 billion in 4 days. I said, so people have been writing to me, sir, please tell us where you're investing because, we won't go there.
You want to get out of that.
Yeah, we would just, wait for 15 days till it goes down and then we're going to invest because you think and it goes down. It's been like this. So now currently the situation is the money is there, whatever is in the bank, it's not growing. It could have multiplied over the years the way a lot of people have made money, I know. And they come and say, oh, I, tripled my net worth. And I'm like, please, we already, going into a major depression with the money thing. I don't even want to look at that. So I think that's what happened. And if I would have stayed invested at that point in time last year, and if Franklin Templeton, so when I spoke to this guy also, he said, no, Franklin Templeton, we were feeling that there were some problems. I said, why didn't you pipe it up to me? Why didn't you tell me? You're taking money from me. You known me for a couple of years. You should have just said, so Franklin Templeton, there's some problem. Let's pull out the money. You just pulled it out and left the rest of it there or whatever, redeemed and put it into something. I would have done that. So I just lost complete trust on that guy at that point in time. And everybody else from real estate also. So this is where we stand. And I think this is probably, apart from other mistakes, like, I won't say marriage is a mistake, but it's okay. Apart from the other mistakes which you make in life, this was probably one phase where I could have, got back whatever I had lost over the years. But
Yeah. And how would you summarize the lessons that you learned from this?
a couple of things. One is that don't blindly trust anybody with your money. You need to follow up. You need to keep reading up about wherever your money is in terms of investments online, whether even if it's something like, So you know how it is. They say debt funds are the safest funds. And then suddenly this guy told me, no, debt has two components. One is the liquid and dude, if I'm going to get 6%, I would have put that money in the bank itself. So I didn't read up. It was my fault. I take it that way. So wherever you put your money, I think it's important to nurture it and keep reading about that particular fund house where you put the money or the stocks or whatever it is on a very regular basis, and trying to figure out if there are some Second, don't put all your eggs in the same basket.
Yeah.
As in, don't go to one agent or one consultant. Maybe there's no harm. There are many consultants out there. Even if somebody's got like my guy had 20 years of experience, but look at where I am. And I'm sure there are enough people who made money through him, but I'm the guy who at that point in time, lost trust. And I said, I just want my money in my bank. So maybe you could have two consultants and take a second opinion, which I did for gold for somebody and it sank, but it's okay. Get a second opinion. So that's, I think, two major takeaways, which I feel I could have,
Yeah. So maybe I'll summarize some of the things I take away from this story. I think the first one is that I was just talking, I'll tell you a story today. I was just talking with one of my clients, and they have funds that they offer, and their competitors use a very complex measure of risk. It's called value at risk, VAR. And basically, as being an advisor to the institution about how they present and how they do their investing, they said, look, we have to present value at risk. And I said, why? He said, because our competitors present it. I said, but nobody understands value at risk. And they're like, yeah, we know that, but they present it, so we have to do it. And I said, no, you don't have to do it. I said, a more simple measure is maximum drawdown, where we just say, look, over the last 20 years, this strategy, you could expect the worst case happened was 50% down. And they say, but we don't want to show 50% down or else they're going to think we're crazy. I'm saying, no, that's what the market went down.
Yep.
And I said, you're doing them a service by clearly communicating, forget all the fancy jargon of value at risk and just focus on something, and if you can convince someone that, hey, this is the truth. In the 2008 crisis, the market fell by 50%. Your portfolio would have fallen by 50%. And that's once someone understands that, then they also can decide, okay, now the key to success in the long term in the stock market is to just wait through it. Imagine if you were out at sea and you couldn't see, anything about what happened. And then 5 years later, you come back. What's happening? Well, okay, if you went into a really bad investment in the stock market or a particular fund or a company or whatever, it can go bust. But generally, you're going to be better off. So that's the first thing, is to understand when you go into the stock market, particularly the equity market, there's a lot of volatility. And the worst thing you can do, there's a report that I've followed for a while, and it basically tries to measure. It looks at the average. Now, another way of handling this is say, own an index fund that owns, every stock in the market. Say, I'm not going to try to pick anything. I'm just going to own the market.
Yep.
The fees are much lower on that. But this research that comes out almost every year from this particular company out of the US, they basically calculate, okay, it's one thing to say, hey, this fund in the last 10 years went up on average 10%, but you can actually calculate the amount of assets that go in and out of that fund, because that's what people are buying and selling. And from that, you can actually calculate kind of the in cost and the exit cost on average that people, and what they calculate is that the bad timing of the average person destroyed about 70% of the return. You would have thought you would have gotten 10, but because you're going to go in and out at the wrong times, you're only going to get 3%. Absolutely. Now, if you tell someone that, they don't believe that, but that's the truth.
Yeah.
So that's the second thing, is that our emotions are really against us when it comes to the stock market.
Absolutely.
And then the third thing, I'll tell you another story, is that I have my sister passed away in 1998, and she left 3 beautiful daughters that were very young at the time. When they got older, I thought, how can I contribute as an uncle? Well, I'm an expert in finance, so why don't I help them get started investing? I got on the plane when the first one graduated high school from Thailand to go to her high school graduation. And I brought $3,000 in my pocket, and her uncle Andrew basically slapped down $3,000 in cash on the table and said, "This is your graduation gift, but you can't spend it. We're going to open up an account, in America, an investment account, and I'm going to have you invest it in this strategy. Very simple strategy. Own one fund. That fund owns every stock in the world, about 9,000 stocks, and just keep buying it until you're 50 or 60, and you're going to be a multimillionaire." And I taught all of my nieces. I have 5 nieces. All of them, basically, I did the same when they turned 18. And then I wrote a book, and then I wrote a course about it. And that's what I try to teach is, you don't even need an advisor when you have such a fund that owns everything. Now, I don't know about India. I haven't had many students in my course from India. I've had them from many other countries around the world. But when students come in the course, I help them to try to say, well, is it this one in India or is it that one? Yeah. But the point is that there are now instruments where an amateur who knows nothing and really doesn't want to learn, spend all their time doing the market, there are alternatives. So those are the things that I take away from your story. Anything that you would add to that?
Yeah, I mean, you pretty much summed it up. So yeah, and you need an uncle like you. So yeah.
There you go. So uncle for hire.
Yes.
So based upon what you learned from this story and what you continue to learn, I want you to go back to the moment in time that you kind of started all this story, and think about the man or woman out there that's really at that point in time right now. What one action would you recommend that they take to avoid suffering the same fate?
Yeah. So one, of course, like I said, would be read up a little bit about it. Just don't be blind investor. Read a little about it, speak to a couple of people, and keep checking on your investments from time to time and see how the market is doing.
Yep. And last question: what is your number one goal for the next 12 months?
I think I'm like, I'm just trying to get the peace of mind, everything pieces together. And I would like to consolidate at this point in time, because irrespective of where the market is going in India, it is going to come down at some point in time, because it's the economy is not doing as well as the Sensex is doing. Maybe it's because of the FDI. I may be wrong there, but this is what I take away from what I read. So at some point it's going to come down. Just sit on your funds at this point in time, consolidate, and wait for an opportunity where you could go back and re-enter the market with, and then plan it long term, so that, next 5 years you have a little, just leave it there, let it grow, something like that.
Got it. All right, listeners, there you have it. Another story of loss to keep you winning. My number one goal for the next 12 months is to help you, my listeners, reduce risk and increase return in your life. To achieve this, I've created our community at myworstinvestmentever.com, and I look forward to seeing you there. As we conclude, Manish, I want to thank you again for coming on the show. And on behalf of A Stotts Academy, I hereby award you alumni status for turning your worst investment ever into your best teaching moment. Do you have any parting words for the audience?
At this point in time, stay safe, stay alive. I think that's my message.
That is a good message. And that's a wrap on another great story to help us create, grow, and protect our wealth. Fellow risk takers, this is your worst podcast host, Andrew Stotts, saying, I'll see you on the upside.
Thank you.